You're with us here on BTTV. I'm Abha Bakaya, tracking the markets this afternoon with Ashish Maheshwari, who's joining us, Director, Arihant Capital. It is once again a sea of red, 0.8% lower, 500-point knock on the Sensex, and Nifty also down 150 odd points. Ashish, no surprises really given the global sentiment, but one would have thought with with the deal and UBS sweeping in, that we might have seen some respite, if some stem to the fall. But clearly, it's the backdrop of global uncertainty and the fact that we're seeing a number of these banking fallouts, a domino effect of sort playing out, not lending any kind of reassurance to market investors back home.
Multiple things are happening in global market right now, like dollar index is again going up. So you are seeing a rally in gold because a lot of risk aversion is happening as far as equities and debt market both are concerned this time, because you don't know like what might be the contagion effect of this particular credit Swiss transaction, and so many people are holding bonds of this bank. What's going to happen on these bonds? Besides this, will it percolate further to other banks or smaller banks in US or in Europe? So there's a lot of uncertainty as far as US and European markets are concerned. And in my view, this uncertainty won't be ending in a very short period of time, because we'll keep on listening such news. And once Fed announces 25 basis point more high, then again there's something like market is jittery about that. In such uncertain time, nobody wants that their bond portfolio take further hit. So a slightly gloomy environment, and in my view, it's not a matter of one bank or a two bank. It may it may even percolate to many banks. This market fearful about, and that's why stock markets are nervous everywhere.
What are you expecting to hear from the Fed? Do you think they'll perhaps take note of the kind of fallout all around them and perhaps have some shift in tonality? Because the kind of rate hikes we've seen, successive rate hikes we've seen, the squeeze is starting to become evident.
The only thing is still the inflation for which entire exercise was done of rate hike still is not getting under control, if you see. So and they are having a very far target of inflation that they want to come at 2% from 5.5, 6% at present. And I'm not expecting that inflation will come down in haste, because once prices of certain services or product goes up, it takes time to cool off. So, in my view, 25 basis point, they will further increase. But now commentary is important whether they will do it once again more or not in near future. I think this market will more keen to listen. But 25 basis point is something like market is already factored.
Okay, so that part's been factored in. The impact on the bank Nifty, let's take a look at that as well. Not really managing to see any kind of support coming in. Specific banks also are seeing quite a big hit. RBL, of course, down 18% over 10 sessions now. That's one that stands out in particular, but otherwise it's across the board, really. What's your take on some of the financials currently, Ashish, and how would you break it up in terms of how you're looking at them between the private names, the frontline names, and so on?
See, if you see banks like SBI from current levels, it has rounded almost by almost three times from these levels. We have seen recovery in SBI from these levels. But these are difficult times as far as banks are concerned, and in my view, we need to take slightly cautious call as far as investing in any bank, because we are not sure what is going to happen in US and European banks going forward. So if they'll be like as a saying, they will sneeze, then you are going to get flu here. And another thing is these are heavyweight banks, and because your 35% of your Nifty component is banking and financial services sector. So whenever any FIIs come to hedge their portfolio, they first try to sell bank Nifty, and this is what we are witnessing: a lot of selling in banking stock as such. Nothing wrong with the bank performance, but I think there's more due to global factor. And in my view, gradually at 500 odd levels, I'll be buyer at SBI, and at some more fall, say 1650, I'll be
Right.
surely keen to buy Kotak Bank.
Okay, we've seen crude oil trend lower almost 18% now in the last few sessions alone, and crude futures are dropping as well. These are, I mean, while of course it's great for India otherwise, but it's not usually a good signal with regards to economic outlook, whether it be consumption in China or otherwise. We're also, of course, seeing other concerns around economic growth back home as well, and we'll come to that in a moment. But on commodities, Ashish, let me get your perspective. Are you tracking the kind of decline we're seeing on these crude prices, and what's your take on commodities?
See, one major problem which will happen because of this banking issue is that credit squeeze will happen everywhere. So if there's a credit squeeze, whether it's China or Hong Kong or Singapore or any other market, you are surely going to see pressure on commodities because until unless there's a free credit, free cash flows are there or free trade flows are there, it will be very difficult to boost the economies and boost the systems. So this is what we are witnessing. So commodity has started now slowing down. The effect of that we are going to see over a period of time. As far as domestic markets are concerned, again, I'm slightly pessimistic as far as metals and commodities are concerned. I think fall in crude is something positive, which will help mostly OMCs where they will
Yeah.
start reporting profit. But otherwise, slightly bleak scenario.
Gold is at an all-time high as well. I know that you're not necessarily looking at precious metals, but just from an overall strategic point of view, an investor today is probably tracking this insane hike in gold, crossing that all-time high, 60,000 rupees, and at a time when equities are really not looking that encouraging right now. Do you see this as a trend that might sustain? Do you feel that investors may be tempted to shift their asset allocation?
Yeah, I see another 5% rise in gold prices even from here. Again, the
Wow.
rationale is if you're not having comfort over your banking system, the money will certainly go to the gold. Second, the dollar index is again going up, which will again facilitate gold related purchases. Hedge funds are more keen to buy hedges in terms of gold instead of buying short term bonds or equities in any of the market. So I think gold will continue to perform, and in short term, another 5% upside can't be ruled out.
All right, so that's on gold. Rate sensitives, let's talk about that. Just when real estate looked like it was picking up, at least on the exchange, it's starting to see a bit of a meltdown. What's your take when it comes to some of the rate sensitive pockets, especially real estate? Because, one could argue that that'll also, I mean, while that is somewhat of a proxy to the infra play right now, it's purely on demand that one's really assessing some of those counters.
I think real estate will slightly underperform in my view
Okay.
because again, your home loan rates are the way the home loan rates have going up. Again, demand for higher ticket value transition will slightly come down. At the same time, as inflation is also high in Indian market, so some pause is going to be there in as far as new real estate purchases are there. But at the same time, I'm bullish on real estate ancillary or slightly rate sensitive those companies which are not directly affected with the interest rate hike. These are companies like which are into paint or home renovation, like tiles or electrical fittings, etc. They will continue to do well because they are getting demand from new projects, and as well as because of COVID, people have not done a lot of renovation and redo work, and which is happening at this point of time. So look at those companies more instead of direct real estate players are.
All right, fair enough. What about discretionary like auto? Do you see a pickup there? Does it feature in your portfolio, Ashish?
Yes, auto only challenge is this time as we are expecting a El Nino kind of event. So rural demand is going to come down as far as automobile demand is concerned. And rural India almost consider around 36 to 38% of automobile sales. So there some impact is going to be there. Second, the trouble what these companies are having on the export side. because end user markets are not doing good. African markets are not having free flow of dollars easily available. So they are having a lot of issues related to exports also. So we have seen stocks like Bajaj Auto, Mahindra and Mahindra, etc., reacting on that. And Maruti is also, we have seen almost came down by 800, 900 rupees at no point of time. So slightly we need to remain cautious, but auto still as a sector will continue to outperform. Only thing is we need to have our own price points. Like Tata Motors, I'll be buyer at 400 rupees and Maruti surely at 7,800 rupees.
Okay. What is your sense, Ashish? How much lower are we going to go from these levels? Because I think that's really the only question right now on everyone's mind. We are, of course, awaiting the Fed's commentary, but just your sense. I mean, now we've picked up a bit. We're off the day's low, 350 points lower on the Sensex, Nifty 100 odd points, clawing back at 17,000. But where do you think we're going to really end up over the next few weeks?
There's $1 million question. There's not one question. That what should be the bottom so that we can again enter. I think these kind of bouts of profit taking or short covering or intraday movements will keep on happening. So that's what I always tell to our investor also. 2023 is not going to be easy year to make money because the more volatility is there, the more chances of panic or more chances of losses are there. So the kind of smooth capital built up or wealth creation that we saw in 2022 is not going to happen in this year because of so many multiple factors. But still, I find that market will find some bottom at 16,800 kind of mark in Nifty, which we saw today. And at that point, price point, certainly domestic institutional investors are buyer in the market. And I'm not very bearish that market will go below 16,500 in short term.
All right, we'll leave it there for now. Ashish, thanks so much for joining us and taking us through your views on all the big developments that we're tracking on the stock markets. Equities giving everyone a little bit of nervousness right now. We'll keep you posted on all the developments. That's all from us for now. Thanks for watching.